Hello and welcome to Next Gen Finance, an SEB podcast about sustainable finance. My name is Lina Apsheva, I am your host, and today I am joined by Paula Dennholt, a Senior Sustainability Investor Relations Officer at SEB. With the annual reporting season drawing to a close, Paula and I will dive into the topic of sustainability reporting, an area that has been developing rapidly over the past years, becoming increasingly more detailed and regulated. In this episode, we will explore what goes into SEB's sustainability reporting, how regulatory developments are shaping this area, and why transparency continues to be a pillar of sustainable banking. So, Paula, really looking forward to this conversation and welcome to the podcast.
Thank you so much, Lina. I'm happy to be here, and I also look forward to it.
And we were just joking about how long your title is,
Yeah.
and maybe that's a good place to start. If you could just tell us a little bit about yourself and what it is you do at SEB.
So, as you said, I work in SEB's investor relations team, and in this team, I am responsible for, so to say, communicating about SEB's sustainability performance and our strategy to primarily investors and analysts. It could be other stakeholders as well. And one big part of this work, and why I'm here, I guess, is because I coordinate SEB's work with our sustainability report internally to make sure it is ready on time and with quality, of course. So you could say, I guess, I work sort of in the intersection between finance and sustainability and also regulations. This, especially the sustainability statement is now heavily regulated, what you're supposed to have in it.
And you said sustainability statement, and you also said sustainability report, and maybe good to clarify that it basically means the same thing. So our sustainability report is called sustainability
Very true.
statement.
Due to the regulation now, it's called the sustainability statement, and we probably earlier said report. True. Thank you.
Yes, and I mean, our roles are a little bit similar. I work with sustainability communication externally, but not with the reporting side, but more kind of other types of communication. And I must say, I don't think people realize how much information is actually available in the sustainability statement. So much. And I think that if people realized that and looked at the sustainability statement, then we probably would have gotten a lot less questions from the public and journalists on a regular basis. But either way, why don't you tell us a little bit more about what the sustainability statement is and what goes into it?
Absolutely. And just to say, it has changed quite a bit in the past 2 years. So if people haven't looked in a few years, there's definitely more information in it now than it was a few years ago. But the sustainability statement is the part of SEB's annual report that explains SEB's work on sustainability. That's the very short version of what's in it. And then it explains how SEB views its major impacts on sustainability, ESG topics, and also the risks and opportunities that we see connected to these different topics. And as you say, it's quite a substantial document. I think this year it's around maybe 80 pages or something, super detailed. So definitely a good place to start if you want to learn about SEB's sustainability approach.
And I guess we absolutely cannot talk about this topic without mentioning CSRD, the Corporate Sustainability Reporting Directive, which is the European basically directive for how corporations should report on their sustainability. And how long has SEB been reporting according to this new regulation?
For us, this is the second year. For Swedish companies in general, it only became mandatory this year. For most other EU countries, it was mandatory already last year. So Sweden was a bit late to the party, so to say. SEB decided already last year to comply with this directive because we have Baltic subsidiaries. So second year for us.
And so could you tell us a little bit about CSRD and ESRS, which is related to this directive? And Yeah, just what does it look like, and what kind of changes did it imply last year when SEB started reporting according to this?
This is a big question. I can talk for a while. Well, the CSRD and ESRS are... The first one is the directive, the EU directive, as you say, which gets transposed or is now transposed into Swedish law. And that one, you could say it decides who should be reporting under this directive and why also, and what to report, while the ESRS, the European Sustainability Reporting Standards, they are kind of under the CSRD, and they are where you can find extremely detailed disclosure requirements. So that's the how. That's what you're supposed to put in your report. And these two together have definitely changed quite a bit how we construct the sustainability report, both the structure of it, the process to decide what to put in the report, and then definitely also what's in the report. So major changes to the report based on this.
So does this mean that all of the sustainability statements, sustainability reports of the big companies in the European Union basically look the same?
Yeah, to some extent. If they fall under CSRD, they have... all of them have to have some things that's mandatory for all the companies. And then depending on what sustainability topics are the most important for your company, the reports will look different, because you are actually only allowed to include information that, according to a process that we might talk about, is deemed material for your company. So some things will definitely look exactly the same, and others will vary.
And I'm glad that you mentioned that, because, in this sea of the acronyms, the next one that I wanted to talk about is the DMA, the double materiality assessment, which is, of course, an important part of this process that you were just describing. So what is the DMA?
The DMA, the double materiality assessment process, that is something that is required by the CSRD. It's a process to arrive at what to put in your report. And what you're supposed to do as a company then is to go through your whole operations and also actually your value chains would be your customers and your suppliers. And looking at all this, decide or identify what impacts your company through your own operations or these business relations, what impacts you have on the environment or on people. It could be positive or negative, and also what risks or opportunities that you see through this whole analysis. So it's a pretty major process if you're a big company, and for a bank it's challenging because we have more or less customers in any industry. We're financing the society, so to say. And well, after this process, you have a set of sustainability topics and impacts, risk, and opportunities that you have defined as material, and that then decides what to put in the report. And it not only decides what to put, but also what not to put. So if there are things that you do work with, but that maybe didn't come up at this most material, you're actually not allowed to talk about them.
Very interesting, and I can imagine that it's also a way of preventing greenwashing, possibly, where companies focus on things that maybe they're doing really good things in, but they're not kind of the most material to their operations. Mm-hmm. And how often, by the way, do companies have to do the DMA?
It has to be done yearly, but there are some writings that says that you might not have to do like the whole process every year if you, by a lighter process, can determine that nothing has really changed. Maybe you haven't done any major acquisitions, or the market is sort of the same. Then you can do a bit less ambitious process.
Yeah, very, very interesting. And I think that we talked a lot about sustainable finance products on this podcast, like green bonds, for example, and there the concept of materiality is also very important, because you can't really approve, at least not according to the international green bond standards, projects that will be financed through that bond unless they are actually material for a company. Like one example that I like quite a lot is if it's a large car manufacturer and then you say that, we are going to replace all of our paper cups in our office with porcelain mugs instead. So we're going to reduce our waste. It's like, that's great, but that's not where you create the most impact on the environment. You create it through the engines of your cars, perhaps. So that's where this materiality question comes into place. And of course, it's not a surprise that it's such a big process, such a big part of the reporting process as well. Right. So when we talk about the European Sustainability Reporting Standards, you mentioned that there are kind of different elements to it. And then through the DMA process, we determine which ones of them should be included and which should not be included in the reporting process. And then my question is, which ones are included in SEB's sustainability statement specifically?
Yeah, so in addition to the general topic that everyone has to include, SEB had one environmental topic, which is climate change, included, and then two social topics or standards, so to say. One is called ES1 for everyone who's interested in those little abbreviations, and that's the own workforce. Our workforce, of course, is very material for SEB. Then we had one that relates to our private customers, S4, so that's consumers and end users. And then we have a number of different topics that we talk about within that. And then finally, on G, is corporate governance. And there we also have a few topics.
If we go into a little bit of the nitty-gritty, I'm wondering what does it mean in practice? And also what does the process of collecting this data for the report look like?
Yeah, it's interesting because there is a lot of focus, just as you say now, on data. What is the process to collect the data? And that is definitely one of the challenges, and that we have been working with for years to have good processes, good data, external data, internal data, and so on. And that becomes even more urgent, so to say, and important with CSRD, because there are very strict, in some cases, very strict rules on what you have to include. So it's a good way to push data, the data question forward. But it's also important to remember that it is not only data. It's a lot in addition to data that makes this both maybe interesting and difficult, because in many cases there is really no data to work with. So you have to work with dialogues internally, workshops, maybe industry proxies, a lot of assessment and actually opinions and knowledge that goes into it, which is not really data-driven. And that is a process too, of course, to ensure that you talk to the right people, have a process to document the discussions that you have, so that you can, based on this whole thing, decide what is the most material for the bank. So there's a big process that runs, the DMA process runs during the spring, and then the production of the report runs during the fall.
And then is it you basically who has to talk to all of these people to collect this data?
Fortunately, not just me.
That would be
that would not work at all. So there's a lot of that's actually both a challenge, but also something that's kind of fantastic, I think, with this. It's a lot of people from within SEB, all divisions, lots of functions that need to be involved to get this right. So it's a lot of collaboration involved.
And it sounds incredibly complicated. And I think that in reality, like having been a witness to this process from the sideline, I think is even more complicated than it actually sounds. But then I think the question arises of what would you say is the rationale behind this process looking like this? Why does it need to be this complicated and this, structured in these many steps?
The rationale that EU has, and I think it's valid in many ways, is they wanted transparency and comparability between company sustainability statements. Then the whole process and the way it's built up, the DMA process, right now at least it says you have to analyze your whole value chain, which of course literally you can't. That those parts maybe are a bit more complicated than they will have to be, and I think there's always a risk that you kind of over-engineer things as well. If you take a step back and have the right people involved, you probably sort of already know what is the most important for your company, but you have to go through a very detailed process to get there. But maybe this will actually become easier and more efficient over time, I would think. But I mean, already for us now, the second year when we can look at other companies' sustainability reports, I definitely see the benefit of it. It's so much more easy to compare between companies in the same industry or between industries. So I think it serves its purpose.
And you kind of mentioned some of them previously, but I'm wondering, what would you say are the biggest challenges when it comes to sustainability reporting today in 2026?
Data is one of them, for sure. The complexity is another one that we already talked about. One that hopefully will improve as soon as the revised CSRS standards come. We don't exactly know when that will happen, is interpretation. That's something we had to work with very much last year because they are, in a way, both very detailed but sometimes kind of not so clear, which is that's a challenge for sure. So that's another thing. And then another thing that we battle with is to make the report compliant to all these disclosure requirements and still useful for the reader, because sometimes you can feel that it's a really massive document, and how do we make sure that this is accessible for people to read?
Well, when we talk about the data and a lot of complex data points and big chunks of information, and how we can kind of get through it and analyze it, I mean, it's difficult not to think about AI, right? So I'm wondering, what would you say is the role that AI might play in this process in the future in helping to address these challenges?
I think lots of different roles, I would guess. When we get more data, when more companies have reported, and you can actually find data on other companies' impacts, risks, and opportunities, and so on, there will be lots of data where using AI as some sort of analytical tool, I'm sure, will be very helpful. And then there are other things as well. We are looking into different ways right now to use it for example, proofreading, or it would be wonderful if we could use it to check ESRS disclosure requirement gaps, if we would have any. I'm sure there are lots of other possible use cases going forward as well.
And I'm wondering, are there any other solutions that maybe come to mind that, just thinking about how quickly this area has developed, I'm sure that there are also solutions that are coming along, or?
Oh yeah, for sure. There are a lot of solution providers, of course, that want to help, want to sell their services and products here. And yeah, we've seen a few different types. One is those that help with a double materiality assessment process. They might have built-in models or tools that you can do your scoring and things like that that are required for the process. That's one thing. We have seen tools that seem to integrate with your writing, that you can more easily tag whether you think that you now have covered a disclosure requirement or not, for example. And then, of course, there's all the data providers as well. So, yeah, there are definitely solutions coming up in this area.
You now have a little bit more experience in this area than maybe your other colleagues, at least in Sweden. And I think you've done a fantastic job with the sustainability statement, but I'm wondering if there are people listening to us that may be beginning on this journey of CSRD reporting, and maybe smaller size companies that are not yet kind of required by law but will have to in the future. Do you have any advice for people working in this area on how to tackle these challenges?
One is definitely to start early. Because it takes time to get it right. And now, if you start now, check all the others that have already reported. I think that is will make life a lot easier for the companies that are about to start now. Work closely with your auditors, because they are crucial, of course, to have a compliant report. I didn't mention that, but the sustainability statement now also has to be audited by an external auditor. So that's, of course, a good quality stamp, so to say, but it also adds to the process, so to say. And then also look at what you already have, because many companies, I'm sure, already know a lot of what's important on a sustainability part for them. They can check their peers. They will get strong hints from their internal policies, other risk assessments, and so on. So most already have a lot in place without maybe knowing, and maybe there are things they already work with that they haven't before defined as something within sustainability, but it still is. Like, for example, for SEB, to give an example, we have been working, of course, for many years with financial crime prevention. We didn't call it sustainability related, but within the scope of CSRD it is, so we have included it.
If I may also give a bit of advice to our listeners, that would be to go and read the sustainability statement. It is actually a lot more interesting to read than you might think, especially if you're interested in sustainability. Thank you so much, Paula, for joining us on the podcast today and sharing your very valuable insights and experiences in this area. And of course, as always, thank you to you, listener, for tuning in. Remember to subscribe, follow, or add the podcast to your favorites, depending on what platform you're listening to us on. That way you will make sure to not miss any of the future episodes. But for now, take care and goodbye.